It's not in the face! Thank you.
Hello and welcome to Hey, Not the Face with your host, John Nash, and your producer, me, Steffi Haynes, and it's Hodgepodge Day. But before we get into our multitude of topics, let's check in with John and see how he's been since the last time we were here with you.
I've not moved. It's the same seat. Have not moved at all.
No shower, no nothing?
Nothing. I am rank.
I bet you're quite ripe.
No, yeah, I am. No, I'm doing fine. Hanging out. I got some people coming over for the Paul Tyson fight, which invited themselves. I actually was planning not to watch it, like skipping it, but that's the fight everybody wants to watch.
Well, we have some questions about it, so we'll get to that soon. But the first thing I want to talk about is UFC. Because they recently took out a loan, and we discussed this a few shows back. They took out a loan for $175 million. But this past week and a half or so, they requested to expand it. So for our listeners out there, how much was the expansion amount, and why would they do this?
To be specific, it's not the UFC that took out the loan. It was Endeavor, the majority owner of the UFC. They took out a $175 million margin loan, and what they used for the margin loan is their stocks, their ownership, some of their shares in TKO, the UFC, and they took it out from, if people remember the name, January Capital. January Capital used to be a co-owner of the UFC back then. It's that company that's a subsidiary of Flash from the United Arab Emirates. So they took that loan from them. I mean, there's multiple reasons. I'm not quite sure why they specifically took this loan, but one thing you take with a margin loan is you're using, instead of using collateral like your company, you're taking a loan as being paid from an entity that has your, like a financial institute that has your that's holding your shares. They just pay you based on your shares, and then you put up your shares as technically as collateral. So it's a simple way to do it. It's an easy way to get loans for companies. There's no taxes on it because you didn't sell the loan, you didn't sell the shares. So there's a lot of benefits for a company for doing it.
Is there a significant level of risk associated with this expansion, considering that the stock market is pretty volatile?
Well, I mean, there is something of a risk because you're putting up your shares as the collateral. And if they do a margin call based on the loan, you could be in trouble. It's hard to say because I don't know what's going to happen with the market, right? I think a lot of the market has gone up. In some ways, when they took out the $175 million loan, and I remember Zach Arnold pointed this out in an article a while ago, that they took out a loan. The UFC made on a earnings call for Endeavor, said they are not going to pay one dime more for the UFC antitrust settlement, right? Not one dime more. And then they took out this $175 million loan, and then they announced the settlement, which they paid more for. But then the shares of TKO went up. What they owed, the margin is lower now because they don't own as much. So with this, the expectation when you take that, you want your stock to go up. So maybe they expect the market to go up because Trump is coming in. But announcing, I mean, not to get political, people, but if you heard some of his announcements on who he wants the cabinet, some people are starting to get worried that some of the campaign talk he talked about, he's serious about, and people are nervous what that could be for the market. So it could be risky, but that's way above my pay grade. And I'm sure these guys found a way to make sure someone else will pay for it if they're wrong.
If you were to speculate, fire up the Speculatron 9000, what would you say this money would be earmarked for?
Well, my guess is what they're doing. I mean, we don't know for sure. My guess is what they're doing is either buying back shares of Endeavor. So they're going to use this money to buy back shares of Endeavor from people, either because they want to have a higher ownership of Endeavor, the Endeavor owners themselves, Ari Emanuel and them, or people are trying to cash out and they're letting them cash out and pay. That's my number one. The other possibility is because, remember, we got a whole new regime coming in, and Cantor and Lena Khan were blocking all the mergers and acquisitions. That was a policy of theirs to not. They might be looking at this is the perfect time to do some mergers, some M&A, and they want the money available to go acquire some other entities to merge into Endeavor. So there's that possibility too. So I would say that's my top two guesses is either buy back Endeavor shares and pay off people, or they're looking to acquire something with that money.
Now, you talked about making some acquisitions, and they did make some recent acquisitions. So my question is, what were they, and have there been any problems with it?
Well, recently, it's the reverse. Endeavor sold their ownership in three entities: IMG, which is a sports representative agency, a ticker broking company, I can't remember the name right now, and then PBR, Professional Bull Riding. They sold those to TKO, which was before just the UFC and WWE. In exchange, UFC and WWE sold shares. So in other words, they watered down the other shares that everybody else owned and sold shares to Endeavor to acquire those. So now Endeavor, who had barely a margin of a small majority of TKO, now has 59% of TKO stock. And then they took this additional shares that they're going to have and took a portion of it and then took out the huge loan they're doing, the margin loan. They went to their broker January and took a large loan out of it. So I guess your question is, what are the problems? Well, the problems are for the other shareholders, who I'm sure are very upset, because what they did is they're basically watering down the TKO stock and making it, the performance of it, weaker, because TKO was a money printing machine with just UFC and WWE. Now you've watered down the shares because you've sold a bunch to Endeavor to acquire what are not nearly as profitable and don't really fit the business model that you've set up with WWE and UFC. And really what you're doing is, and maybe this, I don't even know if this will stand. I mean, maybe there will be a shareholder rebellion and they'll block this, but really they're dumping because they're trying to make Endeavor a more, I guess, a stronger company because it has a lot of weaknesses showing. They're dumping some of their assets that they don't want to lose onto TKO, which has such a money-making machine that it can handle this. But really, this is all to the benefit of Endeavor. I don't see how it's to the benefit of TKO shareholders.
Were there any other problems with the PBR or any of those other, the ticketing agencies?
Well, I mean, the problem is that like PBR is, it's just not the level of business. Like there's a recent story that you shared with me, actually, that PBR, they have their TV deal with CBS, but they had a secondary deal with Dr. Phil's, whatever the frick, Jamboree Hoopla show or whatever. But Dr. Phil, they were doing, and Dr. Phil couldn't pay them. I think Dr. Phil's Main Street Network or something like that. Someone will have to correct me in the notes, but it's not major. But they weren't paying it, so you have this entity PBR that has limited reach, limited revenue compared to the UFC and WWE, and it's not so strong that it's signing these huge major network deals. It's getting, it's signing deals with people that aren't paying it. So, I think that's a problem with the people that bought shares into TKO were probably thinking, I have these two monopolies, and let's be fair, people are buying it because they're looking at these two companies as monopolies. They have a moat and no one can compete. They're just money printing machines because they don't have to worry about the athletes asking for too much. And now you have these other entities that are not quite as money printing machines. IMG is an agency that it fluctuates up and down all the time. So I'm sure they're looking at this. A lot of people are looking at this like, why are you adding these entities that weakened the performance of TKO? And yet they did. And, I mean, PBR makes some sense. At least it's kind of a extreme sport. But when you look at the amount of revenue it brings in and the margins it has and the networks it can get, and the input, it just does not. It's just dwarfed by WWE and TKO. It doesn't make sense. I mean, the boxing, the Zuffa boxing makes so much more sense, and yet they haven't done that.
I did a little looking around to see what ratings were for PBR, and they are in the dump.
Yeah, I don't know how bad. I mean, they have some audience. They built it up. They do show growth every year. But again, you're talking about growth in a fraction of what you see with the UFC. Right. And again, the margins, because the shows are live and you're not getting these huge network deals. They're not doing pay-per-view and generating tons of money. They're just not there. So I see the value in somewhere with Endeavor where they're buying up all these media rights, media entities so they can, build content and property, but it doesn't make sense to put that with WWE and UFC, which are, again, 50% margins. People are going to be upset when you start watering that down.
Okay, when you paint the picture like that, does all of this combined sort of have an ominous vibe for Endeavor? Especially with all the watering down of the stock. I mean, it seems like some kind of a desperate move, but I don't know. You tell me.
Well, I mean, I don't know either, but it sounds like I think Endeavor, I wouldn't say it's dire straits. Endeavor has weakness. I mean, that's partly why they took their stock. They're going private again. They went from the public to the private because they thought the stock was being undervalued for what they're offering. And I think one reason it was undervalued is because people couldn't make sense of the damn company because they kept throwing everything into it. And so to streamline Endeavor, they jumped this content into TKO because they own the majority of TKO. So they'd still retain, they would retain the asset wealth, but it wouldn't be it wouldn't water down Endeavor's numbers and stuff. So is it ominous or does it bode bad? I don't think Endeavor's at a risk to like collapse or anything like that. It's Endeavor still has tons of properties, specifically WWE and UFC, that generate tons of money. But I think Endeavor's, just from an outsider looking in, I don't know if it fixes their problem that people still haven't figured out what the hell Endeavor is.
Okay. All right, so we're going to switch gears a little bit here, and we're going to focus a little bit right now on this weekend's big fight with Jon Jones and Stipe Miocic. So Dana White has been doing media rounds over the last couple of days, and today he had an interview with Jim Rome and interviews with some of our more traditional MMA media entities. And so he gave interviews, and there were 4 major points of interest. Number 1, if Jon Jones wants to fight again after Stipe Miocic, Dana says he must face Tom Aspinall. Number 2, UFC is targeting Hawaii, Spain, and Africa in 2025. Point number 3, Dana wants Khamzat Chimaev to face Dricus du Plessis for the title in his next fight. And point number 4, Conor McGregor will not be back, according to Dana White, until late 2025. So now I'm going to start asking you questions now that you have your 4 points of interest. Referencing point number 1, how important is Jon Jones to UFC pay-per-view sales now? To access the bonus content of this episode, you must be a paid subscriber. To do that, go to heynottheface.substack.com and subscribe today.
Ow! Ow! Not the face! Ooh! Ooh! Okay, the face!